Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So definitely an interesting day. Yesterday, the Fed came out, gave their statement. Market had a pretty powerful move. I think everyone on my floor was giddy, had a great day. The firm had a great scenario. Then today, we opened up above yesterday's high, and then we kind of trickled below it, and some action felt heavy, and it sort of felt as if there was a bit of a sell signal. Does it mean game over? I don't think so. Does it mean if you're holding 8 to 15 to 20 positions, maybe you cut a third of them off? I know I did that today just for the mere fact that I don't want to give anything back. We're not in, there are different modes of the market. There's a mode when you're in consolidation where you're trying to, develop feelers and things that could work. And then there's mode when you break out of a coiled, tight pattern where you get to a core position. And then there's a mode when you rally, you extend, and you take profits along the way, and you're always prone to a little bit of a pullback. And that's where I feel this market is. It's where we've had a big run. We've had various patterns. We're in accelerated, uptrend mode. And at any given point, even though it hasn't happened yet, we could break that and get a little bit more of a pull-in. So I don't want to be caught with the rug pull, but I also don't want to give up the trend and give up making money in what's been a very nice methodical rotation. But today was one of those days where I just lightened up a little bit, and I'll figure out what's next. So if you look here at the SPX, this is what I'm talking about. Here it is. You had your low. This is that longer-term uptrend in October. Another low, higher low in November. Another higher low. And right here is where, just say if you were in a tier 1, you said, you know what, I might want to get to a tier 2. And then if you bought on December 20th, that was a day when I really put on a lot of my positions, okay, because it was the continuation move. Let me get a little closer just so you could see it. Okay, it was right here. And then you had a nice move above this downtrend. And then while we were hovering here, holding, this is when you really could have accumulated some positions, accumulated multiple positions, accumulated some size, and then you let the market run. And if you recall, we cleared this 1292. We cleared this previous high from earlier in October. That was another milestone, right there. And now we continue to extend. But look how long this extension has been. Look how long we are from this October low. And look where we're coming into, which is the resistance of about 1330 to 1350, back from last year. So that's all small little cautionary signs. So now I'm going to get you a little bit even more closer look. So you look here on this accelerated uptrend. Let's just look at this, okay? And what we see here, let's take a look at this bar. This is the first time, I would say in a while, that we pushed through the previous high, right? The high here on the spiders, I think it was 132.87. Here, this was 28, and wound up closing below, and closing, not saying the real bottom of the range, but pretty close to almost negating all of yesterday's move. You don't see that around here. You don't see that in this little 4-day thing. You see a move here that wound up coming all the way back before continuing. And then I guess you could say, this pushed through right here, and then you had this wide range bar which wound up retesting this downtrend, and then we held in there, and then you had actually time to reposition for what was this move. So all I'm saying is I don't want to analyze things too closely, but this was a day to take a little bit of notice, and the real notice will be is if we cross below this, I guess 1308, 1309, and close below it. Not tail, because we've seen a tail. Look, this is when we tailed below this rising channel and closed above it. But if we see, another down day and we actually close below a recent floor, which we haven't really done each stair step besides right here, and we negated it. So we'll see. So all in all, just a day to tighten up, a day to take notice. Some guys might be trying to short a little bit more than they should, but we shall see. But within what was a cleanup day, you still had some bullish action in certain stocks, okay, that held up. Besides some cute short opportunities. One, JCPenney's came out with the news. Guys were watching it. Sperling was all over it. Look at this play right here. You combine a short squeeze with a technical level, and look what goes on. Here is that level that if you were short, the last thing you would ever want to be is short. If it went above there, especially with the volume that we saw, and that was 36. So we went above it, held above it, closed on the highs. Big move, great trade for certain guys were all over it. I wasn't involved in JCPenney's, and now it's coming up to this recent high. So you'll see how it handles it tomorrow. But all in all, that's a big potent move, something you don't want to short in front of. It's called an igniting bar. Igniting bars usually ignite a move, and the last thing you want to do is be in front of it. So I guess tomorrow we'll figure it out. Typically, if these igniting bars are for real, it shouldn't give back more than a third. So I would say it shouldn't really get back below like this 39 before continuing. Then you had Amazon. Amazon's been a laggard. We had a nice move from 184 to like 195. It pulled in. Talked about it on the radio this morning. It went through. Okay, I think in my head, what was that number? 186.20. I'll show you on the chart. And gave you a nice little move here. Here was that first buy area that we talked about 184. Went to as high as 195. Had a control pullback to retest it. Okay, now we turned up. Nice little day. Stronger. Still in that camp. And I guess if it were to trade above this tomorrow, because you still have earnings not for another week, it could continue up to this moving average. So that was a decent little trade. And then you had, some of the casinos. And I was tweeting about them a little bit today, saying that they can continue. I did say that LVS, the first time through 50, could be tough considering we just came from the mid-40s. Be a little careful. Look out for a red dog reversal. Look out for a trade through yesterday's high of 49.87 and back below. If that happens, it means it needs a rest. And if you look at LVS, that's what happened, right? LVS has had a really nice move. When it broke this downtrend right around here is where I got long. And then once it extended over 50, I sold some, and I did get short some today, guys. You're allowed to get short stocks, okay? And look what it did. It pushed through, squeezing the shorts one more time, above 50. Then once it crossed at 49.87, it created a short-term sell signal. Not a long-term sell signal, because look where it is in the midst of this whole rally, but it's come very far, very fast. And this is your sell signal. And now we'll see if we can rebuy a dip, maybe somewhere around here. And let it prove itself that it could hold higher before, on a weekly basis, it tries to get above what has been significant resistance for quite a long time. It might take till earnings. So with that said, when you trade things with groups, you saw WYNN. Okay, WYNN's been a little bit of a laggard. I thought maybe it would hold up a little bit better. It was a decent trade through 121.50. It went to almost 123. And then when LVS started to fail, you had to watch WYNN. And if you tied up some shares or, excuse me, I'm going to promote Starbucks right now. If you felt like you were a little uncommitted, it was prudent to take some off. I'll leave my Starbucks right here. Maybe they'll give me some free Starbucks down the road. Anyway, so you go to WYNN, you go to the daily, and you will see that it also pushed through this high, which was my buy area for momentum, 121.17, went as high as 123.27, and then pulled in. Look where it is from where it broke out from. On a short-term level, a little bit of a sell signal, but on a longer-term level, it's fine. It could pull back and come into this area and still resume, but if you're only in it for the short term, you better sell some because this is a little bit of a momentum change. So that's fine. Push through the high, come back below. There's a rule. Guys, listen. Everyone trades on different time frames. If you're a macro trader, that's fine. You probably bought it at 112 and you don't have to worry about it. If you're a momentum trader, you're only in that momentum tier if momentum continues. If it breaks above a high and you're looking to continue a momentum trade, if it comes back below that high that you traded it for momentum and it doesn't hold it, you get out of the way. That means it's not ready for that momentum. That's a rule in my book. So right there, the momentum wasn't ready to stay, okay, because of the big move we've had in the market. Same thing with MCP. It was a nice momentum move above yesterday's high, but once it wasn't strong enough to hold above that high, then you have to get out of the way and then you get back to what you wanted to hold on a macro level if you wanted to be in it for a macro trade. But obviously, MCP sometimes is just a momentum trade, and then you get out of the way. So if you look here at MCP, you'll see, same type of scenario. On a macro level, once it crossed this downtrend, okay, and traded briefly through this 31, 65, went as high as 32.18. It's only like 50 cents. But once it came back below this and couldn't hold it, then you had to take your momentum tiers off the table. And now if you're trading it for it to hold the breaking of this downtrend for a new trend, you have to watch out because it's going to really have to stay above this area to prove that it's going to stay above this downtrend. Because if all of a sudden it starts breaking below 29.45, it's a false breakout. That means it's not a new trend. So you have to make sure the trend continues. Okay, as far as Goldman Sachs, gave you a little bit of a trade, wasn't ready yet, still held up pretty, a little bit better than some other things in the pull-in today. Traded above that buy price. Some guys had a nice scalp above 109, couldn't get through this high here of 110 and change, came off, but still. So for a momentum trade, maybe you took that off. As a macro trade, still holding around. And I think you got to stay in until, and maybe give yourself a stop here at 105.93. And that would be my stop if you're not committed. But if you're in it for potentially another move here, as long as it stays above this area, it can continue. So that's how you have to know your time frame. As far as some little guys, just for fun, this little one back in the day, I used to play it all the time, came up on my volume filter, GERN, it's one of those human genome stocks, came in. You want to look at some volume here. Let's go basic studies, go to volume, okay. Some decent volume, so who knows, maybe something's going on there. If you remember before that ILMN news, obviously different stock, different space, there was a volume spark and then it closed on its highs and then all of a sudden there was news. So who knows what's going on here with that. Same thing with this KV.A. Saw some volume come in, not really actually, and some news that an advocate investor took a bigger stake. It's holding up. So it's just something in there. Not a trade to focus on, but if you're holding multiple positions, why not? If volume comes in and things are acting okay, try some if that's what you do. If but they're obviously risky. As far as something like X, I tweeted that I sold into some strength. It came back in. X also came in probably a little bit more than people would have thought, especially I would even say me. If you look here, it's one thing to trade above the previous high and come in a little bit. This traded above it and almost came all the way back to retest this 29.30. I would think that this has to hold this 29 area for it to be healthy. Otherwise, it's just a false breakout and that would be damaging. So I'm still long some, but I don't like the fact that this day was almost as big as this one. Typically, you don't want to see that happen. You only want to see like a small day, and you want it to hold the top third of this range. So if this was really super duper healthy, it should have held around 30, not come all the way into here. So we'll see what happens. But at this point, again, we'll see if it could hold this prior breakout. If it can't, then I would think that it would lose some momentum. So that's why I have a few different thoughts on whether or not this rally could hold. If you look at something like Apple, still consolidating, nothing really going on here. Here's your big gap up on earnings. Here was today's inside bar, went briefly below yesterday's low. I think it needs some time. These things always need time. The more it holds this earnings gap, the more bullish it is. At some point, who knows when it is, it could be in a few days from now, once it finally puts like a tail in, which it hasn't really done yet, you could then trade it versus that tail, and then let it continue to build. So this way, if just say went as low as 438 and then traded above that, that could be your buy and use that as a pivot right now. The most recent pivot, it's like 443. So again, it needs time. If you remember when Google actually was healthy, when it had its earnings move, you go back all the way to just say here. Remember that time when I know it's a different time, different space, when Google opened up after that big earnings report. Look how long it stayed in this crappy range, before it even decided to try and break above that earnings high, which was right here, and then it still was faulty. But I'm just saying, things do take time to absorb, a big move, and Apple has had, a big move. We've talked about this being the pivot buy around 395, and then boom, now you're talking 460. So it's going to take some time here. I didn't even touch it today just because it's going to be noisy for a while. And speaking of Google, once again, it's working its way down to the 200-day moving average. I did nibble a tiny bit near the close just because I know the CEO is going to be on CNBC, or I thought, so maybe he's got something decent to say, but we shall see. Things hanging around still. IBM hanging around, maybe it holds above this 188. These bigger cap stocks, what are they doing? Microsoft still unbelievably hanging around. Intel hanging around. So everything's kind of hanging around. Nothing's giving in. No one's really running for the hills yet. So if you can get a day like today that's an off day and you could still have action both ways, that's all you can ask for. Again, today's a day to tidy up a little bit. I heard some people in the news or on CNBC, everyone's going to cash. I'm not going to say name names, but there are a lot of people going to cash right now. I wouldn't say go to cash. I would say clean up positions, definitely be hedged and keep one foot in the door, one foot out the door. As we get more data, tomorrow's GDP will figure out, if we can continue, but we're already in that zone that I've talked about. 1320 to 1340 was my first quarter target, and we're in the third to fourth week of January, not even the fourth week, and we've already reached the middle of that. So a lot of people say, oh, I'm going to raise my target, but you have those targets for a reason, because usually that's at resistance. So right now we're in that resistance, so it's going to take a lot of positive data, a lot more situations that give us a bullish composure to break through there. So we'll see what happens. Maybe Greece doesn't have the default and they come out with the finalization of the news. Maybe tomorrow GDP is better than expected and that could push us. But you have to keep stirring the formula to get those higher prices. And lastly, just so you know, if you're tuning into this recap, whether you're on Twitter, whether you're at on the street, or you're on Minionville, you're in all these places, that's great. That's why we put it out there, because we want you to see our mantra, see what we're all about. But there are times I get emails because people don't get the full story. They see me tweet, they see the morning call, they see the recap, but they're not subscribers of T3 Live. If you want the full picture of what we're doing, if you want to be taken to the dance and taken home from the dance, you subscribe to T3 Live's virtual trade floor. What you do is you see our positions there. You see when they go green, when we put them on. You see when we sell them. A bunch of us are all on the radio talking about relative strength, relative weakness, what tiers are taking off and putting on, and you get the full picture. If you're just following us through Twitter and you're just clicking on this thing, and you're like, oh, I like the recap, but I would have loved to have known that Scott sold his LVS at 550, went short at 540, and covered the majority at 49.60, then you have to be a member of T3 Live. If you want to know that Mark Sperling, when pot was down 90 cents, instead of saying, ags usually absorb bad earnings, but you wanted to hear him buy it, watch it go green on his screen and listen to him talk about it, you have to be a member of the VTF. If you want to hear Laz, you want to hear Steve, you want to hear Mike, you want to hear Andreas, there's so many guys, you have to be a member. We give out all our content to add value to the community, add value to the investing population, but in order to get the full value from it, you really have to be a member of our virtual trade floor, especially if you're trading full time. And with all that said, if you're a subscriber, I'm sorry for the testimonial, but I had a few emails because a lot of people say, oh, I'm confused. You said this, but that. You know why? Because you're not a full member and you don't get the full story. If you want the full story, join the VTF, be a member of T3 Live, and then if you're also a VTF member and you don't understand the strategies fully, take a few education courses. We explain what we're looking at, why we're looking at it, chart patterns, technical analysis, X's and O's. You can't just make free money by watching something go green on our screen and then you doing it because you're not going to know why we're doing it and you're not going to have the conviction to hold or trade any size. So there's a whole formula and a whole package into being successful maneuvering the market on an active investor basis or as an active professional. So figure out your time frame, figure out what you want to get out of it. You can get it all here. Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night.